Hi, this is CH. This video is part of a series of videos titled My ABCs, or Absolutely Biased Comments, to share how an individual investor like you and I can try to find out more about an investment fund from public sources and do some basic research or simple due diligence before deciding to buy the fund or walk away. Do explore the other funds covered in this series and subscribe to the channel if you find this video useful. Some quick disclaimers before we start. This is not a product sales pitch or a recommendation to buy. I'm not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. The information shown and mentioned in this video is accurate as of the date stated here. In this video, I will be talking about the Neuberger Berman Strategic Income Fund. This video is done as a follow-up request from several viewers' comments in my previous videos. If you would like me to cover any funds or ETFs, do drop me a comment in any of my videos and I'll be happy to work on it as long as I can find enough information on the product. Neuberger Berman is a US-based investment management firm founded in 1939 by Roy Neuberger and Robert Berman. In 2003, Lehman Brothers acquired Neuberger Berman alongside with several other asset management firms including Lincoln Capital Fixed Income Management and the Crossroads Group. As most of us remember, Lehman Brothers collapsed and went bankrupt in 2008 during the global financial crisis. Lehman Brothers originally planned to sell off its asset management businesses, but Neuberger Berman's management countered-offered with a management buyout. As a result, Neuberger Berman integrated Lincoln Capital Fixed Income Management and the Crossroads Group and spun itself off in 2009 with the new entity retaining the Neuberger Berman brand name. Neuberger Berman focused on maintaining as an independent and privately owned business, steering towards employee ownership. The firm achieved 100% employee ownership in 2014 and has been maintaining it since then. Today, Neuberger Berman is one of the rare asset management firms globally that is fully employee-owned and links compensations with the strategies and products it offers. This ownership model also promotes high retention rate, with the firm having over 95% senior investment professional retention rate over the recent years. As of end 2024, the firm is owned by about 800 employees who comprise about 28% of the total staff strength. Neuberger Berman manages $538 billion of AUM as of June 2025. Product offerings are quite well diversified, with about 26% in equity solutions, 39% in fixed income solutions, and the rest in various alternatives and private markets offerings. The firm primarily offers actively managed solutions, though there is intention to increase efforts in passive solutions in recent years. The Neuberger Berman Strategic Income Fund that is covered in this video falls under the largest fixed income category and is one of the key multi-sector fixed income offerings. The Neuberger Berman Strategic Income Fund is a sub-fund under the Neuberger Berman Investment Funds plc fund family. This fund family is set up as an Irish ICVC company structure and is UCITS compliant. The fund is registered as a MAS recognized scheme, which means it is suitable for retail investors. Neuberger Berman provides readily available information on the fund managers in the fund webpage. There are currently 4 co-managers for the Neuberger Berman Strategic Income Fund. Ashok leads the team being the CIO and Global Head of Fixed Income. He was involved in the fund since the start of 2018 and is the longest serving member among the 4 for this fund. John is the next longest serving member for this fund since 2019. He is a senior portfolio manager and covers multiple bond funds in the firm. At the same time, he is also a client portfolio manager, meaning he probably represents the team to face distributors and clients to explain and provide updates on the funds. It is mentioned here that he is retiring at the end of 2025, so there might be another person added in to co-manage the fund by then. Robert is also a senior portfolio manager and has been in the firm for 6 years, although he was added as a co-manager for this fund at start of 2025. He is also the head of trading in the London office and has the longest industry experience among the 4. Thomas has a relatively shorter but still decently long industry experience of 15 years, with 10 in Neuberger Berman. He was also added as a co-manager for this fund at start of 2025. There is no specific subsector responsibilities mentioned in the bios, so these co-managers probably work in a flexible team-based approach to cross-cover each other. Morningstar data shows there was some manager shuffling for the fund, especially in 2018 and 2019. With the exception of John retiring at the end of 2025, hopefully the current team will be more stable in the next few years. The investment objective of the Neuberger Berman Strategic Income Fund states that it aims to maximize total return from high current income and long-term capital appreciation by opportunistically investing in a diversified mix of fixed-rate and floating-rate debt securities under varying market environments with a focus on downside protection. This is a really long sentence and covers a lot of things for an investment objective, so let's break it down. The main objective is to get as much total return as practicable. By total return, it means a combination of high income from underlying bond coupons plus long-term capital appreciation, where both are equally important. Of course, the going for high return is not without risk. Therefore, there is a secondary objective on downside protection, or more practically, means to generate the returns without incurring excessive risk. This is to be achieved by investing in a diversified bond portfolio. Here, it only mentions a mix of fixed-rate and floating-rate bonds, but we'll see later that the fund can flexibly invest globally and across all bond subsegments. The word opportunistically and the mention of varying market conditions imply that the portfolio is expected to be adjusted pretty actively and dynamically, which we will see later if this is true. Let's move on to the prospectus details. Neuberger Berman is one of the few fund providers that gives quite a lot of details on investment strategy and processes. The first paragraph states that the fund will invest primarily in US issued bonds, meaning that the fund is expected to be heavily tilted to US exposures. The paragraph below states the fund can invest beyond US into global exposures and without any credit rating restrictions or country restrictions. The only limitation stated here is max 30% in emerging market exposures. The fund can also invest across all fixed income sectors, giving a very high flexibility in terms of portfolio exposures. There is a bit of write-up on the bond selection process that reveals that there are different specialty investment teams responsible for the research and valuation of each sector, and each team runs a top-down macroeconomic view combined with underlying bond selection, resulting from screening and filtering by characteristics that deems them attractive. The inputs from each specialty team are then combined into the portfolio to generate the highest possible returns relative to the market while quantifying risk considerations, and managed on an ongoing basis. The fund is allowed to invest maximum 10% in senior loans, which is considered a riskier and unconventional bond sector in Europe. The fund is also allowed to invest max 10% in insurance-linked securities, such as catastrophic bonds. It is also mentioned that the fund can have a net market exposure from 0% to 150%, although historically I have not seen the fund deviate too much from the usual 100% net exposure. It is mentioned that the fund will typically have a net investment grade portfolio, and as well will likely have the average portfolio duration within 2 to 8 years. These are guidelines instead of restrictions, so it is possible to see the fund steer away sometimes from these guidelines. Lastly, it is stated the fund's benchmark is the Bloomberg US Aggregate Index, which again suggests the fund will likely be heavily exposed to US issued bonds. Given the high flexibility of the investment strategy, the fund is expected to be quite different from the benchmark, and therefore the benchmark is used for performance comparison purposes only. The Neuberger Berman Strategic Income Fund is a focused product and has some additional marketing info in its Focus Fund page. Here, we can see the key selling points are the dynamic sector allocation and active duration management, the attractive distribution yield that we will go through later, and the downside protection through risk management and high credit quality exposure. Here it nicely shows how the fund categorizes the different bond sectors and that the resulting portfolio will have a mix of them. The Focus Fund page also provides a clear example of active duration management in the fund from 2014 to 2024, giving investors a better understanding of how the fund handles the changing interest rate environment. There is also an illustration of the sector allocation changes over time in the fund to show how the fund actively adjusts the portfolio through different market conditions. However, the chart has no legends, so it looks quite vague. The fund commentary, which is available via accredited investors access, gives a detailed breakdown of the sector allocations over the past 3 years that allows investors to better appreciate the active adjustments in the portfolio. The Neuberger Berman Strategic Income Fund was incepted in 2013, so there is over 10 years of track record available. The fund has an AUM of $6.3 billion US, which is a decent size but can definitely grow much bigger for a global diversified bond fund strategy. The fund webpage doesn't contain portfolio details, so we'll refer to the fund fact sheet. Regional breakdown shows that the fund is mainly a US-focused product with about 89% allocation. There seems to be small tactical overweights in Latin America compared to other regions currently. Sector breakdown is where it shows the fund is significantly different from the benchmark, which is the Bloomberg US Aggregate Index. As seen, the index is roughly comprised of 50% US Treasuries, plus 25% agency MBS, plus 25% investment-grade credits. Given the fund runs a flexible strategy, it currently has substantially less sovereigns and has instead allocated to other securitized assets such as non-agency MBS and as well as high-yield credits. This results in a portfolio that still has a decently high average single A- credit rating, since the US Treasuries and agency MBS allocations contribute with AA ratings, balanced off with the high-yield exposures. Currency allocation-wise, there are some very small exposures in various currencies, but with over 95% in US dollars, it seems that FX is not a main source of returns attribution for this fund. I'm also skipping the top 10 holdings as it is all US Treasuries and MBS positions, so nothing meaningful to look at. The fund currently has over 1,800 holdings from over 950 issuers, so it is a pretty massive and diversified bond portfolio. Yield to maturity and yield to worst are at around 5.7%, while average duration is currently at 5.06 years. Morningstar gives a bit more information on the portfolio that is not available in the fund fact sheet. Here, we can see the fund does have some short positions in the portfolio, but nothing significant. Overall, the fund is still very close to the typical 100% net long exposure. The Neuberger Berman Strategic Income Fund comes in quite a number of share classes to cater for different investors globally. A refers to the usual retail share class available in Asia. The fund is base currency in US dollars. Non-US dollar classes are typically currency hedged. Besides the accumulation class, the common distribution class is the monthly distributing class available for most currency classes. There is also a quarterly distributing class that is less popular. The fund was incepted in 2013, although the earliest A share classes were launched only in late 2014, while the others launched progressively over the years depending on investor demands. A share class has a management fee of 1%. Adding other expenses gives a total expense ratio of around 1.1%. Up to 60% of the management fee can be paid by Neuberger Berman to distributors as trailer fees. Distributors are allowed to charge up to 5% subscription fee for these share classes, although I think anything more than 2% for mutual funds is excessive, and 1% or less for bond funds would be more reasonable. The Neuberger Berman Strategic Income Fund provides the annual distribution yield data only in the accredited investor version of the fact sheet, in a summary list of share classes that looks like this. As seen, the fund currently sets a distribution yield of 6.5% per annum for most of the monthly distributing classes across different currencies. This means that any currency hedging costs are factored in the NAV. The only exception is the South African rand. I would expect this payout yield to be reduced if we see aggressive rate cuts happening in the near future. Separately, the quarterly distribution class has a lower payout yield of around 4.5%. Remembering the fund portfolio currently has less than 6% for yield to worst or yield to maturity, so the fund may have to use some capital to add into here to make up for the difference. Using Morningstar charts, we can see the NAV of the monthly distributing US dollar class has been maintained in a tight range that was adjusted after the 2022 market correction happened. There is no visible capital appreciation on the NAV, so pretty much all the returns over time were paid out as distributions. We can see the Sing Dollar Hedge class has a similar chart as well, although here we can see the NAV is instead having a slight decline over time. This is because of the additional currency hedging cost that is factored in the NAV. I would have preferred keeping the NAV stable and factor the currency hedging cost in the distributions to get a slightly lower payout. But maybe most investors prefer this approach done by the fund. The Neuberger Berman Strategic Income Fund fact sheet provides a cumulative performance chart as well as performance data across a few time periods, comparing against the benchmark, which is Bloomberg US Aggregate Index. From the chart, we can see the fund has actually performed similar to the benchmark most of the time since incepting in 2014 to late 2022. There was also the sharp correction in 2020 due to COVID, but it is also a consequence of corporate credit exposures in the portfolio. The fund does show a progressive outperformance since 2023, so that is good. Also, because of this recent outperformance, the fund shows a better return versus the benchmark across all time periods indicated in the table. The table also includes Sing Dollar Hedge class performance, so we can see here that the Sing Dollar currency hedging cost has a range of around 0.6% to 2% per annum over time, and therefore I will usually estimate around 1.5% when calculating Sing Dollar Hedge class returns of mutual funds. Morningstar provides more performance data including calendar year returns. We can see that even with a global diversified fund with generally stable long-term performance, the returns year on year can still be quite varied. Therefore, it is important to have a longer investment time horizon of at least 3 years when investing in mutual funds so that you are prepared to ride through market cycles. Let's run some Morningstar performance charts. Here is a chart since inception of the A US dollar class of the fund in 2014. Comparing against most bond sectors as represented by various iShares ETFs. In particular, AGG would be the representation of the benchmark Bloomberg US Aggregate Index. We can see here even as bonds are generally perceived as having lower risks than equities, some bond sectors can still exhibit quite a lot of volatility over the years. For this time period, Neuberger Berman Strategic Income Fund has outperformed most of the ETFs here, with the exception of high-yield bond and emerging market bond ETFs, both that have inherently higher expected risk and therefore naturally should also have generally higher returns. Shifting to 5-year period, the fund continues to do well, outperforming most ETFs except high-yield bond ETF. The 1-year chart shows similar results, with the fund performing above most of these ETFs and just behind the high-yield bond ETF a little, even though the fund has a much higher credit rating and more diversified portfolio. How about other global or US-focused diversified bond funds? Here, I have included some of the popular funds in the market, and through this 10 or so years of performance chart, we can see Neuberger Berman Strategic Income Fund is somewhere in the middle in terms of returns among these funds. Shifting to 5-year period, we can see Neuberger Berman has moved up in the ranks, suggesting the fund has managed to deliver better performance relative to peers compared to the earlier years. Looking at even shorter 1-year period, Neuberger Berman remains in the top group, so it does have a pretty respectable long-term performance compared to these other popular funds in the market. The Neuberger Berman Strategic Income Fund is often compared against the PIMCO GIS Income Fund that is probably the most popular bond fund in the market. It is no surprise considering both funds have performed near identical over time, and especially in the past 5 years or so. Looking at calendar year returns for the past 10 years, we can see Neuberger Berman actually has delivered more better yearly returns in recent years. However, during bad market years such as 2022, 2018, and 2015, it was worse off than PIMCO, suggesting that Neuberger Berman is either taking on more risks in the portfolio than PIMCO, or that PIMCO had been better in their risk management and capital preservation approach. On portfolio statistics, both funds currently have slightly over 5 years of duration. PIMCO has a notch higher of credit rating at AA- and also has a slightly higher yield to maturity. Both funds also use the Bloomberg US Aggregate Index as the fund's benchmark, suggesting that both funds will be primarily focusing on US markets and US dollar issues. Both are also currently having a distribution yield above 6% levels for their retail share classes. Let's look at the portfolio construct. PIMCO's latest available sector breakdown is dated June, but it shouldn't be too different now. We can see both funds have the same heavy focus in securitized assets, totaling about half of the portfolios. The largest component is the US agency MBS of about 1/3 in both funds. However, there are some notable differences beyond that. Neuberger Berman has lesser government bonds and much more high-yield bonds than PIMCO. This leads to the slightly lower credit rating seen earlier. The biggest difference, however, is the AUM. Neuberger Berman Strategic Income Fund has over $6 billion of AUM, which is a decent size, but still a far stretch compared to the $100 billion AUM of PIMCO GIS Income Fund, which is the largest active bond fund strategy in the market. Having a smaller AUM means Neuberger Berman has to always work harder to promote itself to gain market share. However, the small size also means there is definitely more room to grow, and it is easier to find investment opportunities to boost the returns of the fund. PIMCO GIS Income Fund, on the other hand, tends to be considered more stable by investors given its massive size. However, it is certainly a lot harder for it to find investment opportunities that can make an impact in the very large portfolio. So if I am to summarize this, both funds have had very similar performance history. Neuberger Berman does exhibit slightly better returns in recent years, although PIMCO seems to do better in poor market conditions. Nevertheless, overall performance of both funds show that they are top-tier choices in the global or US diversified bond fund category. However, the one thing to note is that there are more similarities than differences in their portfolio constructs, especially the heavy allocation of half of the portfolios in securitized assets. This means that they are not so great as complements for each other. If you have either one in your current portfolio and are looking to add a bond fund, I would suggest finding other choices instead that can give better diversification of strategies and exposures. With that, let's summarize our findings. Neuberger Berman is a US-based asset management firm with a long heritage and a diversified product range. I particularly like the 100% employee ownership structure, as I think it ties fund manager and investor interests together closely. While there have been changes in the fund managers over the years, Ashok, who is also the CIO and global head of fixed income, has been co-managing the fund for about 6 years or so. So at least this gives some stability in the way the fund is managed. The investment objective and strategy provided in the prospectus and fund focus page are quite detailed. The investment process, however, is just briefly mentioned and would be nice if it is more detailed. The fund has a very flexible mandate with little restrictions and can invest globally across all bond sectors. So any additional information to help investors understand the fund better would be good. It is important for investors to note that the fund is heavily US and US dollar biased. This is expressed in the benchmark used, that is Bloomberg US Aggregate Index, and obviously is also where the core competency of the investment team falls under. Not that this is a bad thing, given US bond markets is the largest globally, but investors looking to diversify beyond US and US dollars should think twice about this fund. Performance of the fund compared to respective bond sectors by ETFs, as well as other popular global or US diversified bond funds, have been very decent, especially with the fund showing improvement in returns in recent years. The fund is comparable to the most popular active bond fund in the market, PIMCO GIS Income Fund, on both performance and portfolio exposure considerations. In conclusion, the Neuberger Berman Strategic Income Fund is a strong performing US buyers diversified bond fund that I think is suitable to be considered as a long-term core allocation in investors' portfolios. This concludes my absolutely biased comments on the Neuberger Berman Strategic Income Fund. Again, if you find this video useful and would like to see more related contents, please subscribe to the channel. Thank you and have a great day.